Good morning. Welcome back to my channel. This is the Alberta Prepper, and I just wanted to talk to you about economics today. The reason why is in my career as an estimator, I've done hundreds, if not thousands, of projects in my time. And I've seen lately a change in how projects are done. In the world of the commercial projects, there are now what are called private equity firms building large facilities like warehouses, shops, and stuff like that. The reason why private equities are doing it is because banks are no longer loaning money out for these types of projects as easily as they used to. But it wasn't now that this situation was happening. It started back in 2018 here in Canada. United States, it started a little bit later, but it started here in Canada because of what was happening in the interest rates and in the economy. The economy was starting to turn downwards in 2018. The interest rates had been at a fairly good percentage, not what they should be, like they weren't 5%, but they were higher than they were before the big crashes that were happening in the construction world. In 2018, they were between 1 and 2%, maybe even a little higher to 3, a little bit over 3, almost to 3. But all of a sudden, they dropped, and they dropped quickly. The funny part is I was working on 3 projects, 2 in Edmonton and 1 in Calgary. All 3 projects, the companies that were building these projects all had the cash to build it themselves, but companies don't do that. What they do is they finance, they use other people's money to build their projects and finance their builds, and then they can use it as a tax write-off in the future for interest and costs and stuff like that. So they go to banks and they go, this is what we have, this is the project that we want to do, this is the amount of time we want to be able to pay it off over. And banks were looking at them and going, no, we don't think that you're a good risk for our banks. Now, counterintuitively, you would go, well, they had the money to build the project. Why would the bank not say that they would like to give that money to them? And it said, no, because the banks were having issues themselves. Banks at that time were having liquidity problems. They were being bailed out by the main bank, the Bank of Canada, in the tune of billions of dollars daily, because they just weren't covering their costs and covering the loans that they had out. So the Bank of Canada decided that they would drop their rate and drop it significantly to help buffer the situation that was happening with the other bank, with the main charter banks at the time. But in return, those banks stopped loaning out to people with good credit, bad credit, didn't matter. All the commercial stuff started to slow down. In came the equity firms. Companies like a BlackRock or Vanguard would come in and started loaning their money out. But it's not their money, it's yours and my money. When we invest in retirement funds and stuff like that, it's BlackRock, Vanguard, and State Street that take care of those kind of things. So they use our money to loan out to companies that need money to build. Well, they went on and they did that. Problem is that their interest rates are even higher than the banks. Theirs come in at 10, 12, 14%. That's a lot of money. So, to companies that are building, if they can't get that kind of percentage back in the project that they're building, then it's not worth moving forward. So in 2019, when interest rates were at their lowest, the banks weren't loaning out money. They literally created a situation that these companies had to say no. They stopped construction for a while. Now, for most people, they didn't see a huge amount of stoppage because a lot of projects were already in the hopper and were already started. But for those that were just getting ready to start, they had a big stop. And unless they could get private equity financing and make it profitable for them, they weren't going to be able to go forward. So we lost an entire section of production for construction. Move on to 2020 and COVID, and that was the reset. That's when the government was able to shut everything down, reset the entire system, and have it look like there was no economic issues. It was all because of COVID. The fact was, the weak economy had already started in 2018 here in Canada. COVID just happened to be a lucky break. Not lucky in the fact of people dying and stuff, but lucky in the fact that the government could stop the economy. And they used that time. That's where the 2 weeks to stop the spread came about. Was not because they thought they could stop the spread. It was because they could stop the economy long enough to reset. And they thought maybe it would only take 2 weeks. What they didn't know was how bad the economy really was. So it didn't take just 2 weeks. It took a lot longer. Once the economy was reset and everyone was back to basics, they were able to flood the field with new cash. The Bank of Canada and down in the States, the Fed, started pumping out cash like there was no tomorrow. And it wasn't cash as such, it was digits on the ledger. So where did all that cash and digits go? Did it go to the local guys? Did it go down to the small end guys? No, not a small amount did, but the majority went into all those companies to make them look solvent. It went into the stock market to make it look like the stock market was solvent. It went into Vanguard and State Street and BlackRock to make it look like they were solvent, because they were not. They were they were on the brink of a Lehman Brothers or Bear Stearns situation, which would have absolutely collapsed the entire economy right across the world. And the reason why you know that that was happening was because of one country, and that was China. Now you're saying, well, how does that affect China? And how does China affect us? Well, a lot of those loans were given to us by China through companies like Evergrande and stuff like that, who were large construction companies, because they had liquidity, or supposed liquidity, before all hell broke loose. When they went back and said, hey, we'd like our money back, or not our money back, but we'd like you to pay your bills, our side decided that they didn't have enough money. They tried to print more and send it off to those companies, to China. But China was like, no, no, we want actual cash, you know, gold, not just certificates, because we know that the economy is already going down. And everyone's like, well, no, we can't. Well, that was when Evergrande went down because it didn't have the money to support its own projects because it lent out money to support other people's projects, which never got their money back because a lot of those banks in Europe and United States and Canada, the small banks, collapsed. They didn't collapse in the way that people think they collapse. They just get absorbed by larger banks because groups like the FDIC or CDIC in Canada go to the larger banks and go, you guys are going to take over these banks, and this is how you're going to do it, and this is when you're going to do it. And they go in and they shut down those banks, place the assets in lockdown, and then slowly move the assets to the larger corporate banks, chartered banks, stuff like that, and say, that's yours. And all the debts and all that stuff that the banks owe are auctioned off. And then they move on. Well, that was all well and good, except for one problem. It wasn't working anymore. The situation was way beyond what the Fed or Bank of Canada or Bank of England or the Chinese central bank or the Russian banks could handle. So everything started to collapse. Then in 22, that's when Russia moved into Ukraine. And it was the perfect moment for the West to try to recapitalize themselves. So they put on sanctions and confiscated Russia's money. And then they started printing huge amounts of money and giving it to their corporations to build weapons and try to boost the economy. Problem with that is that the economy was so weak that even that money couldn't boost anything. And the worst part was the Russians had decoupled from the West. They said, no, we're not doing this. If the people in the world want anything that we have, they're going to have to buy our rubles, pay us in those rubles, and then we would give them the product. But we'd only accept it in rubles. That was oil. That was gas. Well, they gave it at a discount, but they stabilized their economy and helped it grow because they were one of the few countries that had debt, but nothing compared to the rest of the world. So they were able to rebuild themselves slowly. Now, the war isn't helping them, but it's certainly not hurting them the way the West was hoping it would hurt them. And the West was hoping that the destruction of the Russians would help them because they could get the Russian minerals and stuff like that for a huge discount and be able to rebuild their economies. What they hadn't planned was that China would step in and say to Russia, we are more than willing to help you out. And now we have what's called the schism, the breaking up of the two, the West and the East moving in opposite directions, and the economies of both being damaged. The East went with a gold-back idea and a new SWIFT system, And the West stayed on their debt-controlled system and the SWIFT system that they had. Now, more and more countries are starting to move away from that, which makes it harder and harder for us to keep our system up. Once we get to the terminal velocity of failure, there is no stopping. And you're asking yourself, well, what does that mean? Well, those $1 million homes in Vancouver, in Toronto, in Calgary won't be $1 million homes for very long, because all the investments, all the speculative investments, they'll be pulled. And they'll be pulled quickly. And then all of a sudden, there'll be a glut of properties for sale and rent in those cities and other cities along the way, which will go down the hill and slowly but surely take out everyone. Problem is that the governments are lying about this fact and hiding it from you. How are they hiding it? Through CPI and through inflation rates. By telling you the inflation rate is 2%, even though your groceries are going up, your gas is going up, heating your home, powering your home is going up. But those aren't part of the CPI. What's part of the CPI? Washing machines, dryers, TVs, automobiles. Truthfully, how many people are buying those on a daily basis? No one. That's the reason why they're stable. That's why 2% is showing up. But if you were to put in the other products that were normally in a CPI before 1980, you'd find that your inflation rate would be 8-9%. And at one point a few months back, it would have been 12, 14, 18%. Now, the inflation rate and the interest rates are acting against each other and creating a bigger problem that's about to happen this coming year. And it doesn't matter who we vote for if the federal election in Canada moves forward, or down in the States who they vote for today, or the fact is that our economies are about to crash completely. And there's one of two things that will happen. Well, three things. We'll have a massive depression. Millions will lose their jobs. Housing will crash. Commercial buildings will crash in price. There won't be as many workers. And the governments will have one of two options. Try and do a full reset, which is most likely not going to be a winning proposition, or they will have to take us to full-blown war. Because war doesn't kickstart a economy. War removes excess workers, excess products, excess production, and resets it. And it creates a terrible toll on all the countries that are in it. But because they've burned out all the excess and useless production and people and materials, they can start again and rebuild the economy that way. My fear and what I think is going to happen is they've picked the war side because they think that they will win, which they may, and it'd be good for me if they did, as I am living in the West. But it can also be devastating for thousands of families and millions of people. And it would take decades to rebuild. But the economy would be stronger in the end. And people will forget why it started, how it started, and who started it. The fact is that we all started it. We all started it, both East and West, because everything was so easy. For decades before the last decade, it was hard to do anything. It was hard to trade, it was hard to build, it was hard to do anything because we were still rebuilding after World War II and the Cold War. But once we did, everything started going wild. And the banks and the governments were like, well, let's give everybody everything that they asked for because we have everything. But we didn't. We never had everything. We just voted ourselves into everything. And the Chinese did the same thing. They didn't vote their way in, but they felt that, hey, look, we're getting all this cash. We're getting money. We've taken 1.25 billion people and made 750 million people richer than they ever had been before and into a middle class. Everything's working out well until the cracks started to show. And they knew that they needed to do something fast. And instead of being honest and saying, we got some major cracks and we're going to have to make some changes. We can't have everything that we want, but we need to figure out what we need. They decided to do what all humans like to do: hide issues and run away from fear and paper over it. So, that being said, it's time for us to really prepare ourselves mentally as good as we can, prepare ourselves financially as good as we can, and prepare ourselves physically as best we can. God bless us all. Albert Prepper out.